So, Gene, let's talk about how misunderstood that is relative to the multiple that should be applied to this company. Yesterday, very briefly, Microsoft overtook the market cap of Apple. And what's interesting about that to me is not the market cap per se. It's the multiple that you get on Microsoft now compared to, say, Apple. All of a sudden, Microsoft looks more like a growth stock than Apple. Does that make sense, Gene?
It doesn't, and I think investors tend to move in herds, and I think that there's a negative herd going around Apple today, but it doesn't make sense. I think that's the opportunity here, is over the next few years, especially over the next year, as investors get more comfortable about not thinking about iPhone numbers quarter to quarter, I think that there will be this greater confidence that the hardware part of their business operates like a software business. And I think that it's understandable that we've been trained to think about Apple as a hardware business, but I think slowly over time that will change, and that should have a positive impact on Apple's multiple.
Final word, Walter.
I think that's exactly right, but let's also keep in mind that the iPhone business is a recurring revenue business. I mean, we talk about these high multiples that companies with recurring revenue businesses get, whether it's cloud through Microsoft or telecom operators that are getting high multiples now. The iPhone, you're coming back, maybe that life cycle has been extended, but you're coming back every 2 to 3 years. Apple's market share of that important customer base is not declining. It's, in fact, increasing. So this recurring revenue base, whether it's equipment or services, still deserves a higher multiple.